Hey guys, this is a market update, a really important week with the latest interest rate hike from the Fed coming out. So we're going to look at that and how that's going to affect the price of Bitcoin and crypto. And then looking forward over the next 3 to 6 months, because we are now kind of mid to late stage in the rate hiking cycle. And then the market is now starting to think, well, hold on, if we're mid to late stage, are we going to try and front run the flip or the pivot or the pause or whatever it may be, or have we still got more pain to come? So I want to just kind of discuss that a little bit in this video. So this is the Bitcoin price. Now for short-term traders, if you are trading short-term, really the next thing on the horizon is actually CPI. CPI for August came out higher than expected, and that really just derailed any sort of hopes of a rally. We actually rallied into that figure, as you can see here, but the CPI was actually surprising to the market, not in a good way, and we dumped off. We actually came and tested lows again, low for the year, and we've actually bounced off that quite significantly as well. I just want to count these touches. 1, 2, 3, 4, 5. 5 touches to this support level at, around about 18, 20,000. And we are above it for now. But looking forward, we have a rate hike. Now, the market expects a 75 basis point rate hike. I expect this as well. I really think this is kind of 99% certain. You can't be 100% certain about anything. The market is saying that the other potential is a 1% move, 100 basis points. Although I really think that would not be a good signal for the Fed to give the market, because that signals that they're panicking and that everything is out of control. And that's absolutely the opposite of what the central bank has to at least kind of pretend that they are in control of these things. But 75, if we assume that, you're going to get maybe a little relief rally as people kind of, get back to normal. And that sell-off was in anticipation of the news. The news comes out and you might get a rally. Then you go to CPI and you say, okay, what is CPI going to be? If it comes in lower than expectations, that's good, right? That tells us that, hey, these rate hikes are working. The market might rally a little bit off of this, but I think if we just take a little step back, if you're kind of a medium-term trader over a few months, you can just see the area of least resistance is still to the downside, right? You have all of these moving average, the 50 and the 100-day, all moving to the downside. Every time you hit these moving averages, you get a sell-off, right? So it's still we're still in a downtrend, which is selling any rallies, right? And that is really, really obvious to me. This is really important. We're at an important time now, right? Because what we have is essentially Intel coming out and saying PC demand is down. They're obviously going to be giving, lower profits and revenues than their guidance. FedEx came out and said the CEO literally said worldwide recession, right? So they came off 20% off the back of that. And so the worldwide recession is coming. Now, Bitcoin is not a stock, it's a commodity, and it trades along with interest rates and the money supply. What happens in a recession? You definitely don't raise rates, kind of in a recession, but that's what they're doing now. They're trying to raise rates as quickly as possible so they actually have something to lower when the recession comes. For a midterm trader or an investor, what you're looking at here is, well, how much left is there to the downside before they actually start? How long? Maybe 3 months, 3 to 6 months of these rates being higher. Now, the question for midterm traders is, how much is the stock market going to come off because these earnings are going to come off? And how is that going to affect Bitcoin if you're trading Bitcoin? What you can see here is that we see the correlation for Bitcoin and the stock market at all-time highs. This is strange because Bitcoin it's not a stock, doesn't have earnings, and it's long duration. S&P, not even the NASDAQ, you can see. So everything is trading very, very close correlation right now. Now, that's not great news, right? Because even if the stock market comes off, and that means that a recession is here, that means that central banks will be closer to actually saying, well, we don't need to raise rates. That's good for Bitcoin. But if Bitcoin is trading at a correlation of 0.8, to the stock market, then even so it still may come off. And so there's a lot of uncertainty here, which is why the price is low. Uncertainty means low prices, it means low volume, volatile prices. So we're really, really close to something happening here, but it is on the data. And so that is why CPI is really important to look at. If it comes in above still, we are going way lower. CPI absolutely must come in at a lower level than the market expects if you are, long Bitcoin and you're looking for that price to go up. If it isn't, then obviously we're going lower. And so it really depends on, trading right now is very, very difficult. If you're a long or medium term trader, then really you're looking at, buying and accumulating during the mid to the end of a rate hiking cycle, understanding that in 2-4 years time they will not be hiking rates anymore, that's for sure. So it really depends on your time horizon. If you want to go ahead and trade on Bybit, they'll give you a $4,000 deposit bonus. I'll leave that link in the description. If you trade futures, they'll give you up to $4,000 in your future trading account to trade. They're also running an offer which is completely commission-free spot trading. So if you have spot trades you want to do at the moment, it's commission-free anyway, so check that link out in the description. What I want to come on to though is, as a medium, I'm a long-term investor. If you're medium to long-term, you have to look at these things as well. This is the Bitcoin hash rate. And as we can see, it's pretty much an all-time high. Now, this is good and bad, right? If the Bitcoin hash rate is at an all-time high and energy prices are very high, it means that small and medium-sized miners are getting absolutely crushed right now. And that means they're going to be selling their Bitcoin because small and medium-sized enterprises cannot get funding. They can't sell equity too much, and they're definitely not getting any loans right now from banks because the banks don't want to lend out any money, and the money is very expensive to borrow as well. So what are they going to do? They're going to shut down their operations and they're going to sell their Bitcoin to fund themselves, right? And so what we potentially are seeing here is small and medium-sized miners just getting wiped out. And that's coming in many of the data points, selling off, miners trying to sell out and basically, trying to fund themselves, let alone their operations. Now, this is important as well because it tells you really the health of the Bitcoin network. Higher hash rate means more people are hashing. So who's actually hashing right now? Well, Intel have come out with a mining chip for Bitcoin, a very specific mining chip for Bitcoin. Those deliveries were set to go ahead in Q3 of 2022, which is right now. So what we could potentially be seeing, and I haven't seen any specific news items, but we could be seeing larger institutions, energy producers actually coming on to the Bitcoin network. This hash rate could go crazy over the next few years as really big institutions, energy companies, worldwide energy companies start coming on and mining Bitcoin because they have direct access to the oil and gas that they need to power that. Flaring gas is a way of actually reducing emissions and mining Bitcoin, and they basically burn that. So that is going to really improve the hash rate a lot, I think, and it's also going to force out a lot of the small and medium-sized miners. But looking at the hash rate, this network is not dying. It's the price going down, which is a complete divergence from the health of the network, which you can see people and big organizations are coming onto right here. What this is, as well as the Lightning Network. The Lightning Network is a scaling layer for Bitcoin, and so as we know, Bitcoin, the base layer is slow and steady, not great for a worldwide settlement system, but the Lightning Network is a layer 2 on top, which has a lot of nodes on there, and they can send transactions essentially almost free of charge. This is a layer 2 scaling solution, and as you can see, a divergence here. Price starts coming down, but the Lightning Network is exploding. It's exponentially growing. It's still small. As you can see, there's around just under 5,000 Bitcoin in the Lightning Network right now, but this is growing extremely quickly. This is what people use to actually spend Bitcoin. Download a Lightning Network wallet, and you can put some Bitcoin on there and spend it for virtually no transaction charges. And they are planning to put stable coins on here as well. This is, for me, the growth of the worldwide settlement layer, the most trustworthy one. And so, yeah, I don't think Bitcoin, even with price going down, we can see the fundamentals are going up. And so long-term investors, you're looking for that divergence here. So again, it depends who you are as a long-term investor or a trader as to which way you want to go. Short-term, everything is technically still quite bearish, but longer term, you're seeing a lot of divergences here between the fundamentals and obviously price action, which is macro related because everything's correlated right now because the Fed is in charge. Anyway, if you do want to trade short-term, you can get that $4,000 deposit bonus for Bybit. They also give free spot trading for right now. I'm sure that will run out in the future, but anyway, take advantage. Link in the description for that. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.